The buyers that you guys have been sending me that I've been working on have been giving me such great feedback on the experience I've been providing for them. Especially the first time buyers, they really need this more than anybody. And then the second time buyers, the repeat buyers, and they'll tell me this is by far the most thorough and complete report that they've ever seen. And it's just been generating such fantastic loyalty that I need to share it with you guys. That's right off the bat. I have a call with them. I'll tell them, that you are a great agent to work with. Really, it's one of the first lines I give them. I got to pump you up too. I got to get some real juice out of them. I really got to ask them a lot of questions. I'm not going to ask them all this stuff, but most of it, I got to figure out their scenario, what their finances are like. And most importantly, I'm going to ask them, what is it that makes it so important to you to buy a house? It's highlighted here, right here. The reason why I do that is because I have to get their dominant buying motive out of them, and then every time I'm on a phone call with them afterwards, I am bringing that up to them to remind them of why they want to buy a house. It's called future casting. It could be because they're ready to have something of their own. They want a yard for their kids or their dog. They want more room, whatever. But every time I'm on a follow-up call with them, I'm always bringing that up to them because we got to do everything we can to keep these people on track to want to buy a home. So this is basically my questionnaire. I'll then tell them how the pre-qual process works, tell them about myself and our team a little bit, tell them about the application, and then we'll do that on the phone or online. I'll send them a link. And then for the first timers, I will always send them a link to my first time buyer program playlist on YouTube. It's this one right here. It's really just going to be me and a whiteboard. And I'm going to send this through iMessage or whatever text application they have on their phone. And it's just going to be teaching them the basics. It's about an hour long or 40 minutes on 1.5 speed. Does everybody have the appetite for this? Absolutely not. I would say like 30 to 40% of first-time buyers are going to watch this, but the ones that do watch this, it builds more loyalty with you, me, and them all together as a team. So it's basically going to help them understand things so that we don't have to be on the phone call for all of it. They can go and learn this stuff whenever they want. Part 1 is applying and qualifying. Part 2 is the actual purchase process, making offers, you see the appraisal results, all that. And then part 3 is post-closing, get into a lot of finances and, how to manage and pay off a mortgage in the future that really supports their net worth goals, which is what we're getting at. I mean, there's the 3 things that we look to do in the whole guiding your mortgage experience is number 1, let them know what the heck is going on. Number 2, let them pick and customize their rate and points and closing cost, selection. And then number 3, to pay off and manage a mortgage in a future that supports their net worth goals. So I give them that. Then they apply. After that, we have a long phone call. I call it the application summary call. So this application summary call, this is a long phone call. This is after I get their application and I see their pay stubs, their bank statements, all that stuff. I know exactly their scenario and I've clarified items on that application that I need from them. And then I can then give them a report. So I send them this email. We set aside some time with a first-time buyer. It's going to be a little bit lengthier. Hopefully they've watched the first-time buyer playlist and some of this can be a little shorter. The repeat buyers, they're a little too cool for school here. They're not going to want to learn everything all over again. But regardless, I'm still going to give them this entire agenda recap email so they can go reference all this stuff whenever they want. This is a very long email. I'll take you through it in a minute. But basically, I'm telling them, look, you're pre-qualified. There's an estimate attached right here, but rates change every single day. And, this stuff is going to change all the way until, you go under contract and can lock in a rate at that point. I'll tell them, don't do any of this goofy stuff here. Don't really change your financial situation, change jobs, let go of any of your money I've set aside for closing, open up new credit, stuff like that. And then I'm going to walk them through where their profile stands. Now, not only am I going to send them this email, I'm going to send you this email afterwards. I'm not going to CC you on the email because I know a lot of people, they're not going to want you to know, maybe all this, debt to income ratio, savings, credit stuff, but I'm going to give you the stuff that you need to know so that we can both help them out together. So it's going to be super clear. I'm going to have it all written down. You can always go back and reference, but I'm going to show them what their credit is. If there's any ways to improve their credit score, which can improve their payment, we're going to bring that out with them. We're going to go over that. Here's scenario of something I had for somebody else earlier this year. So we've got a credit expert wayfinder. It's a simulator. Basically, it says, hey, if you pay this card balance down from $68 to zero, if you pay this Discover balance down, this other Discover one down too, then let's say there'll be a 95% chance that you jump up to the next credit tier and then can improve your credit score and then interest rate and or closing costs or monthly payment. So if there's really big improvements that they can make, then I'm definitely going to send that to them. Then I'm going to tell them exactly what their debt to income ratios is going to be and what their max monthly payment is. Right here, this bolded out part is the most important part of this email. If they got to do anything else for savings, set anything aside for reserves for like a jumbo loan or an investment property loan. This is just a sample email here. Their real information here is going to be much less condensed, but I want this to be as big for you as possible so you can kind of see all the stuff that I could possibly kind of put on. If they got to do other things to make this work, if they got to sell their current home first, if they got to rent their current home first out, get a lease on it, how much that lease has to be for, whatever. I mean, there could be a multitude of different items in here what they would have to do before they could qualify and close on a house. I'll show them comparisons between different products. If there's potential FHA versus conventional, it could be conventional versus jumbo, it could be conventional versus VA. Tell them the pros and cons of each. This application summary call, this is where the magic happens. This is where I build real loyalty with these people, and they get sticky to me, and they see that I'm working very hard to give them lots of explanations about things and show them all these different numbers and different options they can take on. I'm going to show you more of that later. But believe me, guys, most of the times with the loan officer, even if they're doing 10, 30, 50, $100 million a year, some of the best loan officers, they're not going to be walking these people through all these conversations. Forget it. Like, they have plenty of relationships where they're getting leads from, and these buyers are not pressing them on some of these issues that we're going to go to further on these longer conversations that we have here. They want to just get the loan in, take the application, make sure they qualify, make sure they ask all the questions that they need to the buyer to make sure they know their scenario, collect all the docs, and then it's, hey, here's your rough monthly payment, push them into the offer making phase. And then that's where the buyer engagement process stops with them. But it's after having these conversations, showing them how we're going to make offers, how we go under contract, what happens then, after closing, how we don't sell off the majority of our loans, how we have this online payment plan, bi-weekly payment plan. This is now where we start to get into some deeper conversations. The bi-weekly payment plan, it's basically collecting half of your payment every 15 days. So it's paying a full payment every 28 days and shaving some years off your loan. I'm going to tell them how to refinance right here. And notice how I've got hyperlinks in this email. All these hyperlinks are summary videos to, explaining these topics so they can always go back to them. But I'm not going to let Aunt Gretchen, basically at the Thanksgiving dinner table, radicalize these people and tell them, hey, I had to refinance and it cost me $5,000. It wasn't cool. I didn't like it. Well, Joey just listened to that at the dinner table, and Aunt Gretchen didn't say, she didn't mention that those closing costs were paid out of pocket and that, that refinance was going to save them $400 a month. But literally, some people think that's almost a scam, and you got to have conversations with these people about it. Say, hey, there's going to be a credit pull and an income check on this most likely in the future. Just be prepared. And then when, you got to look at the cost versus the benefits. There will be another round of closing costs on there. It's going to be much lighter, but you just got to make sure the savings can recoup that kind of soon. And how there is a no closing cost refinance, you can always increase the interest rate to cover the closing costs. But then at this point, we get into the estimates. I'll pull out this one right here, 5% down. Basically, I'm going to go over all the closing fees with them. Not all of them, but the big ones. Tell them where they're coming from, how there's 4 different sets of fees coming from the appraiser, the lender, the title company, and the government. When they're paid, why they're paid, the purposes of them all. And, I don't want them to be upset at, just me dumping $9,700 worth of closing fees on them in an estimate without going over that with them. That's not fair. When I first did this business in my first 2 years, I would kind of do that or almost shelter that from them, because literally mortgage managers and coaches don't want people seeing all this stuff. It's literally how a lot of the industry works. They think that if they see all these fees, they're going to be shopping you more. But you really just have to go over this stuff with them. The explanation, just be courteous, actually helping you with this versus just schlepping it on you. I'll show them what their escrow account's going to be like, why we got to set that up. Then over here, total approximate funds to close. Here's their breakdown. And then a monthly payment breakdown over here. Sometimes they'll have mortgage insurance. If they're going to have mortgage insurance, then I'll tell them, what has to happen in the future for that to come off, if it can. After the estimate, we then got to show them how that interest rate was actually made. So this is just a sample one. It's a rate sheet. It's showing people, hey, this is the base interest rate. All these interest rates are on the left here. You got 6.99 is the base here. The monthly principal and interest costs associated with the rates are on the middle. And then on the far right-hand side, you get the extra closing cost required to close with these rates on the left. So you go up, you get lower rates, lower principal and interest payments, and more closing costs. And then as you go down the scale, you get higher interest rates, higher monthly principal and interest payments, and then you actually get closing cost credits. It's not my decision to tell them what interest rate they're going to get. A lot of people just like, hey, here's the base rate for the day, here's what you get, and then they ask them, well, do you want to buy it down further? Well, you can't ask them that because they don't know what all the options are. Here, I'm taking them to the candy store. I'm saying, look, here's your licorice, your Laffy Taffy, here's your popsicles, here's your ice cream, here's your lollipops. Take whatever you want. I have to show them this because I have no idea what they're going to actually end up wanting. There's been too many times where I've given them this sheet, and then they pick something that I was totally not, figuring they were going to take. So, different times we might think that there's going to be a refi boom looming, and then we might not tell them, hey, you might not want to go up here and take these lower interest rates with the upfront extra closing costs because you might refinance out of it, and then all that upfront closing costs for some savings will just have not lasted very long. We come back to this email. I'm going to walk them through the tax deduction. More on this in a minute, and show them what the savings really should be. Should they have a financial situation like most people. Keep on rolling down. If they live in Texas, the taxes there. The two things we can do to lower those, disabled vets, getting those taken off. And then this very important situation here, I'm going to tell them to at least be mindful now that they have a mortgage loan. Do not neglect your 401k, your investments, your higher interest debt, setting money aside for rainy day funds. A lot of people think that now that they have this mortgage, they think that the debt's a bad thing. They want to pay it off as soon as possible. That's not necessarily in the best interests for your long-term financial plan. So I'm not telling them what to do, but I'm at least letting them know, hey, you might want to think of some other stuff because down the road, this payment's going to be high now, but it's going to be easier to pay this down faster in 5 to 15 years when you have, income increases, because this payment is going to be capped out if you got a fixed loan and, don't take out any more money on your house. But, tell them, consult with an FA. So very important conversation we have here about that. Tell them if, adjustable rate mortgages are available, the pros and cons to those. Recasting, a huge one. 90% of your buyers, after they close, are going to have no idea what a recast is because nobody walked them through it. It's really just taking a lump sum of money, putting it towards the balance, and recasting the payment, or basically lowering that. They got to know what to do with the loan afterwards. I got to know all the tools available to them. If I don't tell them these things, it's going to be like selling somebody a car for the first time and not telling them, hey, you need to get your oil changed every 3,000 to 5,000 miles. You need to get your tires rotated. You need to take it in for emissions and inspection. If you don't do those things, it's really going to degrade the investment in your car. By that point, we're done with the repeat buyers. But on the first-time buyers, I'm going to bring them open. This 5-year hold savings calculator is what I call it. So this is going to help them future cast the finances of their house, see a little bit further than what those mortgage estimates are showing them. So what you have right here, these blue numbers, I basically plug in on my own. So you'll see here, it's a $400K sale price on this one. Loan amount is $360. Closing costs roughly 2% of the sales price. You got an amortization table here. This goes on for years. Shows them, what they're going to be making in principal and interest payments every single month, all the way, and what the resulting balance is going to be after every month. This refi table is just something I do in refi season. But then, on top of that, I input what their taxes are going to be every year, insurance, HOA, all that's going to flow into here. It's going to give them a full total monthly payment right here. This scenario would have $2,884, and then I'm going to expect that this home is going to rise at roughly 4% per year, and then that they're going to sell the home in 5 years. So, I can play with any of these numbers, but 4% in 5 years is basically what I have for most people. So, on top of that, I'm going to give them a theoretical understanding of how much this home is really costing them. Because look, it's not like we're selling homes in the 3 and 4% rate days. We really got to sell these people on, the payments, which are higher than what they're used to with rent, and show them all the financial benefits behind them, and really make those things clear. So what I do with this is just a hypothetical, right? Doesn't mean anything, but they can think of it this way if they want. So what I do is I add the front end closing costs. I divide it by the hold time, 60 months, and that comes out to a monthly payment figure of $133. So I add that to the $2,884 full monthly payment here. I do the same thing with the selling closing costs. Selling closing costs, I'm looking at 6% roughly. And then I'm adding this $487 to the full monthly payment as well. And then with the 4% home appreciation on a $400K house, that is rising in value at about $1,400 and change a month. Their tax benefit, which I'll bring you down here for in a minute, is going to be about $317 a month, and then the loan balance is going to be paid down by about $383 every month. So after that, after you add and subtract all these things from $2,884, you have a true monthly cost of ownership of $1,357 if you sell the home in 5 years. And then right here, the proceeds after selling in 5 years, this is going to take the value of the home in 5 years. It's going to subtract out the loan balance and the closing costs to sell, and it's going to give them, what they're going to walk away with is $125.70, versus they went in with $40K down. I say 2% closing costs to buy, so that's $48K is what they walk in with, and then they walk away with this big chunk of money of $120K. That is massive, and they don't see that either with just a regular mortgage estimate. There's a lot more work to be done today to sell these people on buying homes. So, true story, I went through this with somebody just recently at a Starbucks. I met him and he was not going to buy a house. The agent told me, Ben, I really need some help with this guy. Maybe just walk him through the numbers. I said, don't worry, I got it. So I walked him through this, and then he ended up buying a house, and he went to a builder. Anyways, it helped my agent out. I got that agent the sale because of this calculation right here. So, and by the way, one last thing here. Here's how we calculate the tax savings. Assuming this person's a solo filer, their interest paid over a given year, it's gonna be $23K. The taxes on the house, $4,000. Additional deductions, which would be basically state income taxes, means that that's all going to total up to be $32K. With that home, they can write off $32K versus the standard deduction of $15K. Means they're writing off with the home, they're able to write off $17,000. This person, I just, figuring their tax rate, the marginal tax rate is in 22%, so 22% times 17,000 changes, $3,802, which is a little bit back extra from their federal income tax return, and then I break that down into a monthly payment equivalent savings of $317. That's where that comes here. So if I were to change this to head of household, this would all flow in and make all the changes the same. So then that tax savings benefit would go from $317 to $179. And if they went to joint, it would be even less, because now their standard deduction is raising every time you go from solo to head of household to joint married couples. Same stuff happens here. If I increase the value rise per year, the proceeds of selling of the house is going to be more. The home appreciation a month is going to be higher. buyer. I mean, I can change any of these values and it'll all flow in really well. So, guys, I hope that made a big difference in what you see now, what goes on here versus with other loan officers. Those guys are never going to tell you what the heck goes on over there because they do not have this. This is not duplicated. I know for a fact because when I get people from other lenders that have been pre-qualified by these other guys before, and they could be, very well respected loan officers in the community, they won't have any idea any of this stuff. So you have a decision. You can do what you're doing now, or you can send them to me, and I'm going to help them actually increase their chances exponentially with closing. Because remember, not always people buy houses, and this is just going to build loyalty. It's going to build our bond, and it's going to build your business. So, thanks a lot. Look forward to working with you on a deal soon, and call me anytime. I'd love to talk more about this. Thank you.